This video is the continuation of part 1. If you haven't watched that, do go and watch that first, that in which I have explained the technical, and in this video I will be telling about the fundamentals, why we are bullish and bearish on the gold. Currently we are neutral on the gold. For us, being bullish and bearish on the gold is according to the following fundamentals. I am bullish on the gold due to the fact that the COVID 19 vaccine haven't been yet made, thus which can create uncertainty in the market and we can see the S&P 500 falling off the cliff. Moreover, we have seen the US stock market overperforming or overwhelming at the open of the economy, and moreover since then we have seen the S&P 500 has risen exponentially after a deep or a steep downturns due to the coronavirus in the mid-Feb to early March, and we haven't seen a significant breathtaking by the SP 100, and we have only seen an upwards move by the SP 100. So what I am expecting for the next week for the SP 500 is to go. What we are expecting for the SP 500 for the next week is that to take a breath, which means we are expecting a bearish move in the SP 500 and a short-term bearish, a short-term momentum change from bullish to bearish. Thus, if the SP 500 falls, thus the gold simultaneously should rise. Now, however, if we see any vaccine for the COVID-19, the scenario would be changed and we can potentially see a reversal continuing in the bullish, and we can see the bearish movement in the gold continuing. Now, coming on why we can see a bearish movement on the gold is due to the fact that the lockdown in US has finished its lockdown due to the COVID-19 or the coronavirus, as the Trump called for the shift in the COVID-19 strategy to allow the end of US lockdown. Moreover, we have seen a reopening of US economy, which would turn on the risk on factor and the safe haven which has been respected by the investors. Due to the risk on factor, we can expect the investors selling the gold, as the gold has acted as a safe haven in the uncertain times when the lockdown is lifted and the economy is reopened. The uncertainty has been vanished and the US stock market is able to re-attract the investors to invest in. Thus, we are neutral for the week ahead. For gold, we can experience both bullish and bearish move. In this part of the video, we will be discussing about the economic events from 8th till 12th June and how to trade them for the gold for a short-term trade. So let's begin. We do not have any economic event coming out on Monday, Tuesday. On Wednesday, we are having 5 economic events coming out. The first one is CPI. The forecasted value for CPI is 0.0. If the numbers coming out are lesser than 0.0, such as minus 0.1 or minus 0.2, thus it will trigger an long position on gold. However, the numbers coming are greater than 0.0, such as 0.1 or 0.2 or greater, would trigger an sale position on an gold. Why traders care about the CPI is due to the fact as it presents the consumer prices amount of a major overall inflation, majority of the overall inflation. Consumer price. Inflation is an important factor in the valuation of the currency because rising prices leads the central bank to rise interest rate out of the respect of their inflation. So the second event is core CPI. The forecast value is same as CPI 0.01. Thus the number lesser than 0.0, such as minus 0.1 or minus 0.2, would trigger a long position, and the numbers coming greater than 0.0, such as 0.1 or 0.2, would trigger a sale position on gold. Now coming on an FOC meeting, why is it or what is FOC projection, economic projection? This report includes the FOC's projection for the inflation and the economic growth, or the inflation and the economic over the next 2 years, and more importantly a breakdown of individual FOC member interest rate forecast. Thus, as interest rate are indirectly related to the or indirectly related to the gold, as lower the interest rate, higher the prices of the gold, as the central bank has to print more money. And why traders care about it, as it is the primary tool the Fed uses to communicate their economic and monetary projection for the investors. Secondly, we have FOC statement coming out, which tell us or about the interest rate discussion, and why traders care about it, as it is directly linked to the short term interest rate, and it is a paramount factor in the currency valuation. Traders took at most other indicator merely to predict how the rates will change in the future. Now we are having an rate for the next week. We are having federal interest rate cut, and the forecast value is 0.25. If the greater than 0.25, such as 1% or 1.25%, would trigger an sale position on an strength for the gold. And if the numbers are decreased, such as 0.0, or the interest rate are gone in minus 0.05 or 0.25, minus 0.25, thus this will trigger a long position for the gold. We do not have any data coming out on the Thursday. On Friday we have consumer sentiment and the forecast value is 75.0. If the greater numbers released are from 75 such as 80 or 85, which would trigger an sale position in the gold, and if the numbers are less than the 75 such as 70 or 65 or more lower, thus this will trigger an long position on the gold. Why traders care about is due to the fact it shows the financial confidence and it is a leading indicator for the consumer spending and which accounts for the majority of economic conditions. If you do like my video, do like, share and comment below and do consider subscribing. Thanks for watching.